Yes, the question about commingling business and personal expenses when you're a small business owner. I'm Reagan. I'm a numbers witch. I'm your QuickBooks bitch, and I'm an advanced certified QuickBooks Online Pro Advisor. I have been doing bookkeeping for over 10 years, and every single client that I've ever worked with has had a personal transaction in their business account or a business transaction that happened in their personal account. Everybody does it. So let's go ahead and remove any shame that you might have about spending money, commingling money between business and personal. This comment reads, "Hi, how about a client is paying business expenses from her personal app account in which she was withdrawing from the business?" I'm not really sure what that question is talking about, but I think it's talking about commingling business and personal expenses. So if a client is paying business expenses from her personal account, here's how I handle that record keeping. All of my clients, I set up a cash account on their chart of accounts in their bookkeeping. And the cash account is not a thing that exists in real life. It is an account strictly to use for record keeping in the business's books. And the cash account is where I record business expenses that happened in an account that I don't see in the bookkeeping. So if a client has a business account with Chase Bank and then they have a personal account with Capital One, and they spend money in their Capital One account, their personal account, on a business expense, and they give me the receipt for it, in their business bookkeeping, in the cash account, that is where I record that expense because that expense happened in their personal account. It did not happen in a business checking account that I can see. The cash account is where these types of transactions get recorded so that the business can claim that as its business expense on the tax return. We don't have to keep track of their entire personal account just to grab that one expense. I put it in the cash account, and then at the end of every month, I clear the cash account, I zero it out through their owner's equity. When you're a sole proprietor, a single member LLC, that's what it is. You're using your personal funds, your owner's equity, to pay for a business expense. So I do one journal entry a month in the cash account to basically zero the cash account out so that the business is not showing that it has like some weird cash account with a balance or even a negative balance. That is the way that we keep those business expenses recorded, and we show that the business owner put in their personal funds, their personal equity into the business in order to pay for that expense. I hope that helps answer your question. Let me know if you have any other questions about the cash account. If you are a small business owner who is doing their own bookkeeping and you're not sure how to handle the fact that you do sometimes commingle your business and personal expenses, first of all, there's nothing wrong with that. Everybody does it, and I can teach you how to record that in your business bookkeeping using my bookkeeping foundation kit. It is linked in my profile. It is a quick digital course, and you also get 38 days access free to my private virtual community with all of my clients, so you can ask me questions and get support with your bookkeeping. Purchase the bookkeeping foundation kit from the link in my profile.